Hello, Facebook. Get out. Let me set this up. Get my finger out of the screen. All right. Okay. So, dive into this. I had lunch with my friend girl, and I would tag her in this video after I'm finished. I don't want to try to tag her while I'm driving. But we had lunch this week, and saying low network connection, so let me wait till this reboot. I think the internet is low. I don't want to be talking. It's not live streaming. Wait till this green tab kick in. Okay, so it's saying it's recording. I hope so. So, all right, now it's back. My internet connection temporarily went out. But I'm having, I was having lunch with my friend girl. Earlier this week, I would tag her in this video once I stop driving on this back road, get to my destination. And she was explaining to me some of the new tax changes, and I won't try to go in debt, right? Because that's not my area of expertise. But whereas people are losing under Trump's new tax laws, a lot of deductions, itemized deductions that they would normally claim. For example, if you work from home for your employee, let me prop my phone because usually when I make this turn, it falls. If you work from home for your employees, for example, for your employee, and a lot of those tax deductions you were able to claim, right, on your tax return, but you can't. And even with mortgage rates, find my sunglasses. So even with some mortgage interest rates that were able to claim tax deductible, if you don't meet a certain limit, even your tithing and offering, things like that, if it doesn't meet, and I forgot that number, a certain number limit, which a lot of people don't. I'm not sure if it was 18,000, but if I'll tag her in the video, and if it's not correct, then or maybe Tim can comment. But if it doesn't equal up to, I think it's 18,000, your tithes and offering, your interest rates, then you're not able to claim those deductions on the federal side. However, you still can claim them on the state side. So that's why I recommend, if you're in Mississippi, get with Tim Lee and get your taxes done, and his professional staff of experts on their team. Now, I'm saying this because if you're experiencing a $2,000 or $3,000 less tax return than normal as a result this year, which many people are, there are ways for you to get that money back. There are ways, if you're losing deductions that you would normally have from your employee, on your job, your internet connection, your utilities, there are ways for you to get that money back by simply tapping into the home-based business model, and Mr. Tim Lee can tell you more about those opportunities. So next year, you can recoup and regain that money back that was cut out from Trump new tax laws this year. So again, if you're in the Mississippi area, because Tim has all the information for you, he can help you get that tax money back for next year, then you need to go see Mr. Tim C. Lee and his professional tax bracket. There's nothing you can do about it for this year. That went into effect 2018. And so now if you want to regain that money, those deduction backs, go see him. All right, the second thing I want to talk about is the new Ultra FICO score, right? It's the new Ultra FICO score. Now, I often talk about capitalism, right? What is capitalism? Capitalism is when businesses and things, especially in the United States, are built around you psychologically to have you to spend your money, right? And I'm not going to go through all the months of the year, but like this is February, right? And we have Valentine's Day, so now you see all the bears, the balloons, the roses. You know, people feel obligated to honor Valentine's Day. Last month, January, you have New Year's Eve. You have people with the New Year's Eve caps for 2019. Glasses, the parties, buying the liquor, the alcohol, or if they go to church and they celebrate New Year's Eve, buying the food and festivities or whatever, you know, the new outfits that you might want to purchase on New Year's Eve to wear to church or whatever it is, you know, teenagers going out partying, whatever. And so every month there is a system in place designed to take your money. So I want to start with October and how this affects the new 2019 Ultra FICO score. October begins with Halloween, right? Then we get into November and December. So a lot of people say, or I heard a lot of credit experts say that, hey, it's easier to get your credit fixed during the holidays because the bureaus are just overwhelmed or bombarded with customers. And that's not true, right? That's not the case all the time, because it's easier to get your credit fixed during the holidays because they want to offer you lower interest rate loans, and they would dispute that to get your credit score high enough to get you approved so you can spend your money. That's my philosophy. That's my concept of it. And they want you to spend your money during that time, right? And so in January, you'll be depleted of your money. You're broke again. And then you file your income tax return, and they want you to put your money back into the economy March, April, and May, right? And so that's why it's easier to get your credit fixed during the holiday season, because they want you to improve your credit. But now the Ultra FICO model that's just been released, Experian, is the first out of all of the 3 credit bureaus. And just kind of off topic, but still on topic. Someone asked me one time, why do many people think the credit bureaus is a federal agency, a federal entity, that they're not just private-owned businesses, right? And my answer at that time was because any business or operation that has the power to change your life with a 3-digit number, people will automatically think that it's connected with something very powerful like the federal. But I heard someone give another, and I think a better explanation. It's simply because they have the word bureau in their name, right? And so when you think of bureau, you think of FBI, you think of CBI, and you think that it's connected with federal, but it's not. Experian, TransUnion, Equifax, they are all private businesses, right? Very lucrative private business, but they are all private businesses. And Experian is the first one to roll out the new Ultra FICO beginning this year in 2019. So now that they have taken your money, right, during the holidays and increased your credit score, now they have a plan designed to lower your credit score, and now to give you higher interest rate to make sure they recoup their money back. And so they're changing the business model. That's why if you're going to do-it-yourself credit repair workshops or fish on credit, that's good. But if you don't know the Ultra FICO score model coming out of 2019, it may not be as highly effective, because in times of, usually between the ages of 25 and 40, people would dispute and remove negative things off their credit score. And show me some digital love on Facebook. Give me some digital love, right? between the ages of 25 and 40, that age group, right? And why 25 and 40? Because they graduate from college in high student loan debt. And now, thank you so much for the digital love. Thank you so much. And now they have this high amount of student loan debt, or they need a vehicle, right, to transport them to and from college, to and from home, especially if they 10 out of state. And all of these things takes credit. And so now it's 25, and they may look at, hey, I might want to get married and buy a home. And now my debt to income ratio is terrible because I have high student loan debt, and I have this high vehicle note that I got financed. And, you know, we see the high school graduation where parents got the little red bow of debt and giving their child a vehicle for high school graduation to go to college. I don't ever understand that. But anyway, unless they need a vehicle, like I said, to, you know, maybe they travel a long distance, but I would still buy something very pre-owned and used. But anyway, that's another topic for another day. And so now the Ultra FICO scores say, hey, yeah, we let you dispute under the old model, and you added some trade lines, and you got your high credit score. So we want you to spend during the holidays, right? And so we offer you loans and things at low interest rate to get you to go to the car lot, buy that new car, finance is 6, 7, 8%. And or we want you to go to Belks or go to I don't know, try to Bass Pro Shop, and that's why during the holidays, all the salespeople always ask you, hey, would you like to apply for a car today? Not knowing that that's running up your pulls on your credit report and your inquiries or your inquiries, and then you have to pay somebody like me to get them deleted off, right? Because one inquiry pool can lower your credit score by 9 points, especially if you don't get approved. If you get approved, it may be from 2 to 5 points. It will lower it. If you get denied and don't get approved, it can be up to 9 points, right, of lowering your credit score. So you do this 2 or 3 times a day while you're out shopping, then you can get home in 2 days and see that your score is dropped by 27, 30 points. But anyway, so now the Ultra FICO score is rolling out, and it's based upon, you won't believe it, cash flow. Cash flow. So for all the people that have bad records in the check systems, right, where you have negative checking accounts that's closed because of insufficient fund or a negative balance, or if you have insufficient funds, it will not include if you pay your bills on time out of your checking account. That's not what the Ultra FICO score will. It will look at how much money do you have left over at the end of the month. Some people suggest at least you need to have $400 or $500 of extra cash flow. Some people suggest as much as $1,000, right? But if you're living paycheck to paycheck, you won't even have that. You won't even have that. So in order to get your credit score to this Ultra FICO score model that's in place this year, because some people will see their credit score drop from anywhere to 200 to 300 points based off, and it will recycle and recalculate every 90 days, every 3 months. And so your credit score drops 200 to 300 points because you have an insufficient fund fee, or at the end of the month, you only have $5 left in your checking account, but at least be in the positive, right? And so this is how I help people come back there, right? And let me do another just insert right here, another commercial break. There are some times where you need to restore your credit, and then sometimes you need to repair. So what do I mean by that? Repairing, in my definition, is removing or deleting negative items, right? So I said this way: sometimes you need to remove items from your credit report, sometimes you need to restore them. I may have 2 scenarios. Number one is a scenario where I have 2 credit reports. One person has $80,000 in student loans, right? 120-day late pay. The other person has $30,000 in student loans, but 120-day late pay. So the person that has the $30,000, and let's say they got this started, they have 5 different student loan accounts reporting. It started in 2012, and they all total to $30,000. Let's say 6. And all of the loans average about $5,000 a piece. They got this in 2012. It's still reported in 2019. And they're showing late on the loans for whatever reason, you know. That needs to be restored to show paid as agreed, because that's a long credit line that's reported on your credit report since 2012. So that's approximately 6 years. But and it's not a very, very high debt ratio reporting. But if you have 100,000, for example, 100,000, and you have 5 different trade lines of student loan for 100,000, and let's say that was 2016, and it's affecting your debt utilization ratio on your credit score, you just need to get that deleted altogether. It's not a very long credit history, and the debt is too high. And once you get that debt removed, right? Why my nose is itching this morning? Once you get that debt removed, then your credit score will skyrocket. So it takes a professional and a customization plan for everybody to know what's the best situation or scenario to do for their credit score. So Ultra FICO, again, is based by the checking system, and I'm going to let you know this, and then I'm logging out. The way to get around Ultra FICO, people, and your taxes, and to get your money back from your taxes, if you're losing $2,000 to $3,000, and the way to get around Ultra FICO is to be a part of this business. This part of this home-based business that I'm associated with, Mr. Tim Lee is associated with, and it's only $50. How would that help you with your Ultra FICO? Because now I help you open a business checking account, and it will, your personal checking account activity will shift over to a business checking account activity, and it won't negatively affect your credit score if you, and it gives you positive cash flow out of your paycheck, so you can stop living paycheck to paycheck, right? You can get an additional $200 to $600 a month. And now this is the whole strategy, and you get your $2,000 or $3,000 back that you're losing this year from your tax return into the new tax return. So look at the benefits of investing $50. I should have everybody liking and sharing this video, hitting the watch party. You get to come back the Ultra FICO score model that's being released in 2019, because I show you how to open a business checking account. And now your personal score is not weighed heavily from your personal checking account. If you didn't get what I said in the beginning, just go back and watch the beginning of this video. And you get $200 to $600 of extra cash flow. So cash flow is what impacts and affects the new Ultra FICO score. How much positive cash flow do you have left over at the end of the month? Now you have that positive cash flow to show, and you can eliminate debt and get some things restructured. Right? I used to say refinance, now I say restructure, because sometimes refinancing would be an option when your credit score improves, and sometimes I call it building bank account through bankruptcy. Get some things refinanced through bankruptcy. Did you know that if you, for example, have a vehicle, I just learned from attorney Sweeney, I tag her in this video as well, that, for example, if you got a vehicle finance and you got 26% interest rate, I think she said after 910 payments or owning or being in that financial contract for 910 days, which is a little over 2 years, I think, you can refinance no matter what your credit score is and whatever the subprime lending rate for vehicles at the time, and at the blue book value. So if you overpay for the vehicle, and when you were making payments because the interest rates were so high, now the value of it is depreciated. So 2 years later, you can get it all through bankruptcy model, refinance at a lower interest rate, no matter what your credit score is, at whatever the blue book value of. So let's say you owe $12,000 at 26% on a vehicle that's worth $7,500. Now you get a refinance at the blue book value of $7,500 at a lower interest rate, and it does not require a very good credit score. So that's the restructuring model that that I discussed. So, hey, that's it. You need to comment. You need to message me today. How do I get started in my business? I want my tax money back. I want my $2,000 or $3,000 or more back. I want $200 or $600 of cash flow in. I want to know how to set up for this ultra FICO score so my credit score won't drop 200 to 300 points. Hey, I'm signing off. You out here like and hit share. You need to watch back this video again. How to get your $2,000 or $3,000 back. How to prepare for the ultra FICO score that's already being released, and how cash flow plays a part of that. Forget these fix yourself credit. Adding trade lines like you used to do and removing negative items is not the thing. Thank you so much. Will not work anymore. That's gone. That's gone. Of doing that, giving you a 750 credit score, those days are over with. That's why the ultra FICO score is being released, because they got, I guess, they got tired of people just adding good trade lines and deleting things from their credit report and have a high credit score. So, hey, I'm signing off. Thank you so much. Thank you so much. Thank you so much. You have a blessed day as well. Queen of Credit. I always get tongue twisted. Miss Coach Deloach.